everyone. My name is Evgeny Xata, and I run CyberTrust. I'm the CEO of CyberTrust. And I won't be pitching CyberTrust to you today, but I will be sharing you my thoughts on a macro level and specifically related to crypto and monetary reset and what can we learn from the history. And it's interesting because there's a question, is Bitcoin a hype or is blockchain a hype, or is there is really fundamental value there? And it's a very tough question to answer, and I think a lot of answers can be found in the history of technological revolutions. And I would like to briefly go over that with you, and maybe some of you will form your own opinions, because it's better that way. So, wealth and technological revolution. What lessons can we learn from the history? So the main question, right, is, are digital assets a hype or next wave of wealth creation? Is it just a pyramid, or there is a fundamental technological breakthrough that can get the world living standards up substantially higher? And the answers can be actually found in the history. So let's just deep dive into it, and I think you will enjoy it. So this is the content of my presentation. I will discuss things prior to capitalism, because that's important to start as a starting point. Then the first technological revolution, which was textiles. Then railroads, electricity, automotive, microchip, and then just extrapolation for what we are witnessing today. And then the basic question is the blockchain core technology for the next wave. So let's start. So prior to capitalism, and people have to understand that capitalism was not always here. GDP per capita was actually growing at 0.01%. And this is very important to understand that, because it means that it took you 100 years to grow your wealth by 1%. And of course, nobody waited that long. And the way people created wealth is they would take a sword and they would go and kill their neighbor and take his money. And that's how the wealth was created. And that's why a lot of investment went into the military. And as a result, majority of the population, they lived in extreme poverty. Slavery basically was replaced by feudalism as a world order, but there was no growth, or very minimal growth. And then mercantilism came along in 1400s to 1770, and that was the first bump, technological bump, because what mercantilism was, it was about technological innovation. And it was about navigation, it was about compass, it was about shipbuilding, and it created a lot of value. And this value was predominantly based in northern Italy and Holland. And when you walk around Amsterdam, you can see that value. But it was meaningless, because basically if you compare it, everything that was created prior to 1770 was close to 500 billion GK dollars. And GK dollars is an abbreviation that economists use. It's called Giri Hamis dollars. It's a kind of international dollar that is based on 1990 prices, but that's very important because you can compare things. So $500 billion is basically 0.1% of the current level. So this type of system just didn't create much wealth at all. And the first kind of breakthrough was textiles. And the time period for that was 1770 to 1820, and it took exactly 50 years. And the technological innovation was, there were a few very core technological innovations that occurred that drove a lot of value creation. And the first one was cotton gin that was invented in US that allowed to do 10x price reduction in raw cotton. Another one was cotton processing innovations by Arkwright and Crompton. And before that innovation, it took you 50,000 man-hours to do 100 pounds of thread. And by the time the technological revolution was over, it took you 135 hours. So it was just a magnitude. Today, I think it's like 25, but it's just a magnitude increase, right? And then, of course, Joe Smith metal wheel, that drove 5x improvements in electricity. So those were fundamental technologies that shaped the first revolution, but it was not really about technology, it was also about organizational technology. And in fact, like the breakthrough technology at that time was when people, they started working in factories. And it was actually a big breakthrough because before people would work in their homes, and by aggregating them in the factories and putting a manager over them that would beat them, that was extremely efficient. So there was a lot of wealth creation. In fact, world GDP in GK dollars grew from 500 billion to 700 billion. a 40% increase in just one country. And Great Britain became the wealthiest country, and Adam Smith actually published his book about the same time, and his book became basically philosophy of capitalism. But then, in the end of a cycle, there was a lot of oversupply, prices crashed, there were negative margins, and UK actually, being the richest country in the world, actually experienced 20% plus unemployment rate. And then there was a panic of 1825, there was another financial crisis of 1837, and then what's interesting is that at the end of each technological cycle, there's usually a monetary reset, and at that time, it was bimetallism. So, things were not working out, everybody got together, and they said, listen, we need to stabilize worldwide economy, and let's create a standard. Bimetallism was created as a standard, and silver and gold both were used as a reserve currency. The second one was railroads, and in fact, it actually also took 50 years. And the biggest breakthrough at that time was precision metallurgy. And what that allowed to do, it allowed to create cylinders, which were basic component in a heavy-duty steam engines. And the steam engine created locomotive, and then the entire wagon industry was created, railway industry was created, that drove demand for metals, and that drove demand for coal and ore. But then there were also organizational improvements at the same time, and the biggest organizational improvement at that time was how to manage the company that you could not see people, right? Like, how could you manage a railroad? And there was a big dilemma at that time, and nobody knew how to solve it, and people created telegraph to solve that. Wealth creation, so the GDP grew from 700 billion to 1.5 trillion. And average CAGR of growth was actually 0.055%, but that's the worldwide level, right? And US was growing much quicker than UK, but UK was still a dominant power, and Europe was catching up quite quickly. And guess what? There were very little regulation. In fact, the ICOs of those days were parliamentary projects. So each railroad had to do a parliamentary act, and it had to be project, and parliamentaries had to vote in UK for it. And in 1841, at the peak of the railroad mania, there were like 250 projects, and 90% of them were scams. They were intentional scams because they were assuming railroads on the swamps, or they were assuming that the train had to go up the hill, and at that time the steam engine could not even get the train up the hill. So they were intentional scams, but that was very important to mobilize capital and actually create this innovation wave. By the end of the cycle, of course, there were excesses of the beginning of the cycle, and then by the end of the cycle, people had to pay for it, and usually those are taxpayers. And because of diminishing returns from railroad investments, they built too many duplicate lines, there were crises. And in fact, if you think through it, all financial crises, they've been really occurring during the ends of those long cycles. And at that time, there was a panic of 1873 that triggered US and European recession from 1873 to 1879. And then in 1871, Germany and UK joined and created the gold standard. And that was basically monetary reset of that cycle to stabilize things and to get to a new growth wave. And the next growth wave was electricity. And that actually lasted exactly 50 years as well on adoption curves. And the growth at that time was in electricity infrastructure. Electrification of industrial usage created a lot of value and a lot of efficiency. And share of electric motors grew from 0 to 90% in this period of time. And then electricity drove demand for copper and organic chemistry. And DuPont, BASF, Bayer, Dow Chemicals, those are companies that were created during that time. And the second innovation was steel production. And there was a Bessemer processing. That was the biggest innovation in metals that occurred that allowed to actually reduce the price of steel by 4x. At the same time, there were a lot of organizational technological improvements. And those were called trusts and holding companies. First time in the history, trusts were created to actually hold subsidiary companies in it, and that was the breakthrough innovation, organizational innovation at that time. And centralized hierarchical, army-like organizations were basically the breakthrough. That was the biggest innovation of the time. And things like managerial revolution by Andrew Carnegie, where you had to deep dive and cost allocations, this was the high tech of that time. And world GDP actually grew from 1.51 trillion to 2.85 trillion. That's 160% increase from a previous year. And what you would see is that each successive revolution actually exponentially increased the value, the wealth. So USA became the world leader, and actually Germany overtook UK at that time. And US and Germany, had significant government support and deregulation in the space. But then, at the end of a cycle again, benefits from electricity diminished, and oversupply and competition started reducing the profit margins, and a lot of systemic crises occurred. The stock crash of 1929, the Great Depression, and World War I and World War II, the end of that cycle. So the monetary reset at that time was the solution, which we know was called Bretton Woods. And that agreement basically anchored US dollar to gold in order to stabilize the markets. And in fact, monetary reset historically been always about the same thing. That everybody says, listen, we need to promote global trade, and we need to stability in the world. Let's anchor things to something. And at that time, they decided to anchor it to gold, to USD. So the next wave was automobile. And that actually lasted exactly 50 years as well, based on the adoption cycle. And in the beginning of the curve, there were only 5 cars per 1,000 people population in the United States. By the time the wave was over, there were 550 cars per 1,000 people. So it's 100x increase. There was significant reduction in the price of a car. And the reason for that was actually organizational innovation, because Henry Ford invented a conveyor belt. The car was actually invented prior to the revolution, but actually organizational improvements that Henry Ford initiated drove significant reduction in price that actually kicked off the entire revolution. And then what automobile did is it pulled other industries, right? The oil industry was created, and then when oil industry started developing and investing in a cracking technology, they created aviation kerosene. And aviation kerosene actually created the aviation industry, and then travel industry was born. So what you see is that usually the technological revolution is not really dependent on just one industry. It's usually a constellation of things that really fit with each other quite well. But you also see that there's always not about technologies, it's almost like 50-50. 50% is about technology and 50% about organizational technology. And at that time, the organizational breakthrough was the conveyor belt. That was the organizational breakthrough. And it started in automotive industry, but then it actually drove the entire consumer revolution, because all durables all the consumer durables started to be created by conveyor belts. And then the other innovation was specialization. That's when we had basically HR and marketing and accounting. Specialized functions were born at that time. But then again, there were a lot of wealth. In fact, the fourth technological revolution created 5.8% more wealth than everything previously combined. So the magnitude is exponential growth. The average CAGR of growth, excluding the population growth, was 1.8%. And it was a lot to do with Keynesian economics, heavy regulation, heavy government involvement, and then Soviet Union and Japan challenged US dominance. But then by the end of the cycle again, there were crises, and at that time it was, since it was an auto and oil technological wave, it was OPEC embargo and the crisis of 1973 and stagflation. And then the benefits of oil and automobile actually diminished, competition over supply, and there was a lot of problems in the world. And again, there was another monetary reset. In 1973, Nixon, as the previous speaker said, canceled the gold standard. And that's when the fiat system, as unbacked fiat, fully tradable currency, was born. And that was the reset to move from one technological cycle to another one. And that's when it happened, and that's when G7 actually created this reset. So the fiat is actually a reset of the previous wave to another wave. And now we actually had a new wave coming up, and that wave called microchip. And that was actually the fifth wave, and I would assume that it would probably go for 50 years as well. And the tech, the underlying tech, was not automotive, it was about computation. It was about transistors, right? And the cost of transistors, like the transistors became super efficient with the advent of microchip, and there was unbelievable price reduction. Everybody knows, about Moore's law, but the Moore's law is basically about price for computational power halving every 18 months. So the world never saw anything of that magnitude before. The price reductions were just unbelievable. And at the same time, there were new managerial techniques born, and those managerial techniques were about decentralization. So decentralization is not really a six-way thing. It's actually a previous-way thing. It was to do with decentralization. It was to do with the fact that managers on the ground knew things better, and it's better to empower them and outsource things to them. And that was the big organizational push at that time. And there were a lot of wealth creation. In fact, the wealth grew from 13 billion to 67 billion. It's almost 5x again of all the previous years combined. And the average CAGR was 1.7%. And there were a lot of deregulation in telecom and electricity sector, and China challenged US dominance. But today, we have billions of microchips. I mean, look around. Microchips are embedded pretty much in every device there is. There's everything. You have microchip in your pocket right now. There are billions of microchips, and there are diminishing impact from them. There are thin margins. If anybody looks at microelectronics, the margins are like 1 or 2%. So, mortgage crisis of 2007, and I would probably imagine upcoming event, because we are structurally at the end of a cycle and the beginning of a new cycle. And my view, personal view, is that decentralized currency systems and digital assets as a separate asset class and the blockchain as a world trusted reserve currency system is a next monetary reset, which will get us to a new wave. And just really quickly about, before I jump in, what the new wave will look like, whoever is economist out here, and I'm an economist. So in economics, we think of, in terms of factor of production, all going into this black box, which we call economy, and then this black box producing goods and services priced in dollars or whatever. And those goods and services are consumed, and those are kind of valued in standards of living. And they're basically kind of major resources that go into this black box. And it's capital, it's labor, it's land, it's mineral resources, and all the first four are deficit related. But there's information, right? And in fact, information only became a resource in the last revolution, right? It pretty much didn't exist in the fourth one, or the third one, or the second one, or the first one. So the entire economic philosophy that was built during this time of capitalism was really built on the first four factors of production that are all deficit related. And in fact, economics is a study of a deficit, right? It's like, it's deficit, everything is deficit. How do we solve, how do we allocate resources in a proper way? But with information is abundant. It's not a deficit anymore. And that's why, capitalism is coming to an end. And it's interesting to see because the drivers of the next wave is going to be almost like a post-capitalistic. So let's talk about them, right? And by the way, I wrote a book about it, and in my book, I think that as soon as the information was created as a resource, instead of a 50-year cycles, I think they became 25-year cycles. So in fact, the last cycle, I think it was not a microchip. It was microchip first 25 years, and then internet and data the second 25 years. But the question is, what is the next one, right? And how should we look about it? And it's really about computation. And I don't think it's about computation. Computation was a microchip cycle. In my view, it's about a trust. It's a digital trust, right? And there's a cost to trust. And this cost has been reduced quite significantly. So I think we're in the next 25 year cycles. And in fact, you only need about 1.5% a year of CAGR, excluding population growth, to be classified as a technology that can drive the cycle. And in my view, blockchain, together with IE and IoT, can certainly drive that level of growth for the next 25 years. But what's more interesting is that we have a new organizational innovation, which is called decentralized autonomous organizations. And I think that's the most important part, because this is really key to understand this next revolution that we're witnessing, because DAOs are a new way to organize a company. It's a new and better and more, in many cases, more efficient way to actually process the resources. And the most important resource now is information. And the question we should ask is how to improve efficiency of information. And DAOs can do that. Not necessarily the ones that exist right now, but maybe the ones that will come out in the future. So in terms of wealth creation, I mean, it's going to be exponential, right? This new revolution will create 5x more wealth than what we have now. So in my view, it's going to be $200 trillion of new stuff, of new products and services that do not exist yet. And this is very interesting because they do not exist yet, right? Like, we don't even know what they are, but there's going to be 200 trillion of them. And of course, US will be challenged, and whoever will win this game will probably relate it to regulation. And the end of a structural cycle of the microchip actually will push this process, right? And will actually push this transition. So I think, again, I do believe that decentralized monetary systems is the future of the world, and it's actually the monetary reset, the new monetary reset. So what are the takeaways from all this macroeconomic stuff? So the first takeaway, I don't think it's about blockchain. There will be constellation of technologies that would feed off each other, and there are a lot of examples of that. Oil and auto was like a mingle that happened, all feeding off each other. Development in auto fed development in oil, and development in oil fed the development in auto. Same thing happened with microchip and computer. Development in microchip fed development in computers, and development in computers fed the microchip. Internet and data, same thing. So it's not going to be blockchain, it's going to be blockchain and. Together with IoT, IE, possibly, because they can easily pull 1.5%. Decentralized autonomous organizations is a better way to organize production and a more efficient and competitive way to process incoming resources in order to produce new types of goods and services. Main focus will be on improving efficiency of information. It means more open source, means more connections between blockchain, like Cardano. We're big investors there, we're believers. And then token money and scams is a necessary evil. It's a way to actually mobilize needed capital to develop the infrastructure that needs to exist and is not there yet. And adoption is still far away, and much of the token growth will be based on managed deficit, and we're seeing that right now. Pretty much all of them are managed deficit type of place, and the future expectations. And deregulation or government hands-off approach is not going to be an option in this case, because the blockchain is really going against what the government stands for. So it's going to be interesting to see, because in the way we look at things is that there are two types of government regulation regimes. One is so-called closed economies like China or Russia or South Korea, in that matter. Dictatorship related, they don't want the money to move out of the system. They will be against blockchain. We'll see a lot of pullback from them. But then at the same time, open economies, I think they will actually embrace blockchain because of geopolitical reasons. So expect a lot of volatility, and expect a lot of big projects that drive post-capitalist type of value creation, like Wikipedia, that are very, very hard to quantify. And the forecast for 2008. So I think 2008 will be a year of crypto lawyers and crypto litigation. There will be extreme volatility. Our model, we're putting between $300 billion to $3 trillion market cap. Many more new unicorns, many based on post-capitalist notion, impossible to value based on cash flow. And crypto geopolitics will surface up. There will be emerging markets versus open economies. And the final thing, I think central banks will embrace cryptocurrencies, will be created to drive efficiency of tax collection, of accounting, of monetary and fiscal policy. I think this is it. Just briefly about CyberTrust, we were founded in 2004. We do private equity, asset management, and advisory services, all in crypto. We were early investors in Ethereum. We do asset management. We have a unicorn fund. We did quite well. We also work on crypto bonds, which are fixed income instruments, which pay fixed income backed by crypto. And we're also working on crypto securitization in Luxembourg, which we think will be the next wave to drive institutional investors into the sector. Thank you very much.